Hey everybody, today is Friday the 13th of December 2013, and this is Brian Shannon speaking from alphatrends.net. Let's take a look at these markets for the week. We'll take a look at the table first, and we can see that the S&P 500 lost 1.5%, the NASDAQ down 1.3%. The Russell continued to underperform a little bit here, but the other markets are starting to catch up with it percentage-wise year to date. Semiconductors tried to break out and pull back in. We'll talk about that one, and financials lost some ground. Gold was up, but obviously remains in a primary downtrend and guilty till proven innocent. Let's take a look at the charts here. The S&P 500, you can see we did break our first level of support here at about 179, and we're still dropping. We're below a declining 10-day moving average. The 20 is flattening out and the 50 rising. So we're still in a primary uptrend. However, we have had a pretty large run, and it would seem reasonable to expect further pullback from here. If we take a look at the lows that we saw in October to the recent highs, a 38.2% retracement will get us down towards that 175 level, and you can see that's where we had some prior support as well. Prior to hitting that, though, of course, there is this rising 50-day moving average at about 176.30 right now. But let's take a look at the intraday action to try to get a better look. We'll take a look first at 65-minute candles, and again, we look at 65-minute candles because there are 6 of those each day that are 65 minutes long, with the market open from 9:30 to 4 p.m. So what we see in here, and what I hope you're seeing, is this pattern. It's a head and shoulders pattern, which is considered to be bearish. So a lot of times we see that they do fail. So you can't take it and say, oh, it will now drop to the level of the height of the pattern. So we could just call it 182 down to 178 and subtract 4 points from that for a target of 174, which actually ties in nicely with the other areas we're seeing. But we can't just look at it and say, okay, it's a head and shoulders pattern, I'm going to sell short and we're done until it hits my target. We have this prior little, where we are right now is in this little band of prior resistance here, and this is kind of a neutral zone the way I see it. Because the primary trend is higher and the intermediate term trend is lower, we see that as, of course, based by the declining 5-day moving average, that we want to look at this market as very cautious going into next week. We're again in this kind of no man's land right now, and if we break below it, then we have the potential perhaps to get down to that 174-ish area. So we want to go into next week thinking that we need to be on high defense. We are in a typically bullish time of year, and for the buyers to regain control of the market, we need to see at least above 179, but I'd like to see this 5-day moving average flatten out and begin to turn higher. So we have to again be very cautious going into next week. Shares of the NASDAQ 100, they're kind of in this little area, important level as well, where we've seen a little bit of prior support. Basically 84.60 to 85 had been this little support. We're in that zone, but we're below a declining 5-day moving average, so you have to be very cautious. Let the market work some of this buying off that has occurred. We've seen a real big move here the last couple months, and we broke this trend line this week. Trend line breaks, as I always say, don't mean the market will reverse or that the is going to turn lower, but it is an indication that the rate of ascent has slowed. And if we see a 38.2% retracement of the October lows to the recent highs, that's what that is, then we would see it down testing this 50-day moving average in this prior area of congestion near about the 83 level. So the moving average is now 82.79, but that's moving, and it doesn't really, it's not meant to be an exact level. So let's take a look again at that 30-minute time frame. Here's kind of our band of support, and I would expect, I would have thought, and what I was looking for today, as I had mentioned, was ideally for another bounce in here and then to be able to sell short some weakness. But again, with the primary trend still higher, when you look at the weekly and the daily time frame, the primary trend is still higher. I don't think it makes sense to sell short for more than day trades until we do some bigger damage to the charts and we see the bigger moving averages heading lower. The Russell 2000 made a lower high and this lower low here this week, so we have an intermediate term downtrend. We are below that declining 5-day moving average, and we have prior support, which is is going to have to be retaken in order for us to trust this market again. It has the potential for resistance. And we can see here we are in this downtrend. So intermediate term is guilty till proven innocent. Longer term, we're in a primary uptrend, just a couple percentage points off of all-time highs, of course. And looking back at let's take a look at the 65-minute time frame. You can see that this has been a pretty important area here, just below the 109. Let's say about 108.85 up to 109.40. This has been an important area of support, so we'll see if the market can hold on in there. We're also trying to struggling to hold on to the rising 50-day moving average. Now, what would be good here, and what we see oftentimes, is that once we break that 50-day moving average and we don't get a strong bounce, is that we go down and kind of flush out underneath an important prior low and then reverse higher. So it's kind of similar to what we saw over here, where we broke the 50-day moving average, we got a bounce, and then it came down, flushed them out there, and then went once again. So this is, though, we're getting into an area that should be support. There's no evidence that the buyers are regaining control here. We still have a declining 5-day moving average, so don't be a hero and try to buy it yet. And one thing that's kind of disturbing is that, we've been watching these semiconductors for the last several weeks, saying that 41.40 to 41.45, if we could get above that and hold above it, then it would be bullish for these semiconductors, and it looked like they have some room to run still. Well, you can't just look at it and say, hey, it's above 41.45, I've got to buy and hold on. There has to be, breaking out is one thing. Breaking out and reversing, though, is completely different. And what we have to do is we have to say, okay, it broke that resistance on a gap. It made the higher high and the higher low. And then what happened? It made the lower low. It made a lower high. And now we're below a declining 5-day moving average. So this breakout is now invalidated. You can't look at it and say, hey, it's in breakout mode. In fact, it's down to the 50-day moving average very quickly. Now, if we can't get back above the 41.50-ish here in the next couple weeks, then we run the risk of, from this failed breakout, could come a fast move lower. So be, again, on high defense in all these markets. The financials, they made a lower high in here as well, still sticking to that 21 to 21.10 level as a band of support. And we can see it here on the daily time frame, where going back to July and then again in October, it had been resistance. So we want to see 21 hold. Maybe we drop down slightly through it next week and scare some people below that 50-day moving average. But I'm still saying the primary trend, the longer term trend, is still higher in here. But we have near-term reason for concern because, again, we had this breakout over here. Now we have a lower high, and if we break back down through that, then it could really put this whole financial sector in jeopardy, that rally. So this 21 to 21.10. These are 30-minute candles we're looking at for about 30 days. So that's where we are with those markets. Let's take a look at gold. It was up this week. However, I will continue to tell you that it's in a primary downtrend with a declining 10, 20, 30, and 40-week moving average, and that it's likely, more likely to come down towards this 113 level than it is, I think, to rally to 125. So I'd say still stay away from gold. It's in a primary downtrend. The bond market this week rallied just a little bit, and we've still got that bigger pattern and that bigger target in here. With again, we've got it's not just the pattern that is the Head and Shoulders pattern with a height of again, very conservatively 130 to 111, so 19 points off of this 114. That will give us a price objective of 94. It's not that so much that makes me bearish. It's the fact that we're below a declining 5-day moving, 5, 10, 20, 40-week moving average, and the daily time frame, we're still below all these moving averages. It seems as though the market is trying to find support, but typically, a sideways action like we're seeing in here tends to get resolved in the direction of the primary trend, which is still clearly lower. Let's talk about Apple for a moment. Apple had pulled back here today. If you've been following what I've been talking about here, I was talking about a couple weeks ago getting back above 528 was going to put us in a position to test 550, 575 before the year end. We did hit that, so that was a real nice trade beyond that 528 level. It had a great rally up, and we started to see signs of distribution. And last night I said that if we get below this 559, 560, then it looked very likely that we would retrace some further in here, down to probably at least the 31.8% retracement, 38.2% retracement rather, and that would be down at about $550. So I was suggesting that people could day trade it for a short side trade, but because the primary trend is still higher, I don't think you want to be having overnight exposure in such a strong stock that is so beloved by so many people. But here this on Thursday we saw that the stock rallied up in the morning and found resistance just below that declining 5-day moving average, and then as it broke the lower low below 560, it was pretty obvious that this was some near-term distribution with these lower highs. The support broke, and then we're in corrective mode. So I wouldn't be looking to buy that in the near term. Let's take a look at another interesting one here, which is you can't trade it on an exchange, but this Bitcoin has been incredibly volatile. What we're looking at are 4-hour candles here on Bitcoin, and this is just, let's see, going back, let's see if I can scrunch that up a little bit. You can see here this is since about November 15th or so that it's had these massive runs, and it's making lower highs. It's got a little bit of support down here near about this 850-ish level, that if it breaks that, perhaps we go test these little lows. But it's incredibly volatile. I went to a Bitcoin convention this past week in Las Vegas, and it's a super exciting industry. I'm going to share with you more details about it as I learn more and try to find really what I think are the best places to trade it. It's still kind of confusing here in the U.S. But some of the other stocks that we looked at this week included Tesla. As it broke this resistance in here, I was targeting the declining 50-day moving average, and we came very close to that. Overall, the same thing week after week. I tell you, take a free trial if you haven't, and if you haven't, then I would encourage you as well. But the focus is the low risk, high probability trade setups. That's what we talk about in Alpha Trends. And we actually bought it in here intraday on Thursday as it was looking good. Some of the other notable stocks this week, we're getting in to NSC over here and just getting out earlier this week. So Norfolk Southern had a real nice move that we were able to participate in. We got involved in Baidu right here and got out right at that point. Also got involved in EJ, sold half of it on this day and sold the rest on a stop as it gapped lower the next day, but still profitable on both pieces. Yoku was another good one we got involved in right here at this point and got stopped out that same day right over here. And Hydra, which was one I had said to subscribers, I said, this one looks good above 265, I think it was. I said, but I'm not going to trade it because I'm not comfortable with biotech stocks. So here on the daily time frame, it was right here is where I called it. And I didn't trade it. Some of the subscribers did and had a great day with it. But the point is to find the low risk, high probability trades like BALT, and say that here this one still has potential for upside on the weekly time frame, and day in and day out we talk about these types of stocks and then adjusting our stop to levels that the market tells us to. So it's a swing trade approach. A lot of times I day trade the stocks that I talk about, and other people decide to day trade them as well. What I'm always trying to teach people is to make the trade your own. That is, I'm looking for a setup, and whether we're buying CZR right here as we did or buying it again today at this point. Now, if you wanted to buy it yesterday at $19.61, I think it was, I had us get stopped out right in here, but then I said repurchase here today. So if you have more tolerance, you buy it at the right place and raise your stops slower than what I do. It's not about really giving trades out so much as teaching a process, a consistent methodology to trading so that you can thrive and make money in any market environment and know when to go slow, such as right now when we do have the market below a declining 5-day moving average, but to focus on the fact that there are always going to be good individual trade setups regardless of what the market conditions are. But we have to look at these markets and say, okay, the market's not cooperating fully, but I've got a good setup. Let's let's trade smaller share size. Let's put our stops a little bit tighter. We don't want to have the probabilities are greater that we'll get stopped out, so let's lose less money. I think there was one trade this week we got stopped out of for a penny loss. And then the stock did continue lower, which is always gratifying to see. Anyways, I don't mean to go on and on. I hope you have a good weekend, and thanks for tuning in.